What's up, you guys? Tyler Huxford here, and for today's video, we're going to talk about what's the best option for investors: investing in the stock market or investing in real estate. This is a question I get all the time, especially from young investors, because realistically, the ideal answer here is to be invested in both. But for a lot of young investors, this isn't possible yet, simply because not very many young investors have the capital to have a foot in both places right now. So while diversity is the best way to mitigate risk and to increase the gains that we can see by riding both of these waves, a young investor might need to think a little more strategically through which of these investments to more heavily pursue. So today we're going to cover this. We are going to break down both the pros as well as the cons associated with both investing in the stock market as well as investing in real estate. And this will be primarily for your own personal reflection as you consider which of these investment types will be best for your portfolio. So first, let's talk about the stock market. So one of the pros to the stock market is the incredibly custom approach you can take to your investing. You can be invested in ETFs or index funds, which is essentially being invested in a basket full of stocks, which can represent an entire sector or hundreds of companies in a single market. And this you would do to mitigate your risk and to ensure you are riding the tide of the good old-fashioned American or international economies. And history has taught us that you can almost assuredly expect an 8 to 12% return every year simply by following this model. However, there are thousands of companies and therefore thousands of individual stocks you can be invested in to really increase the potential upside of your gains. This, of course, is a little bit more of a riskier approach given that you're investing your money in a single company and your fortune is therefore dependent on this single company and how it does. And then there are options out there including things like crypto in today's world, which introduces even more volatility and therefore even more upside as well as risk to your portfolio as well. So the advantage here is the stock market is like a buffet and you get to choose what you put on your plate. High risk, low risk, old tried and proven sectors as well as new and innovative sectors, proven business models or new and innovative ideas, hundreds of bundled companies or a single stock. However, with this buffet style approach can come a lot of risk. The valuation of the stocks depends on the way the market values those companies, investors value those companies, or even something as simple as the overall emotions and sentiments associated with those companies. Which means in the short term, you're going to see a lot of ups and downs that are completely out of your control, as your money is essentially riding the wave of the way the market perceives an asset, which you technically own but have very little control over. And this can be hard for anyone who gets stressed out by seeing their hard-earned money rising up, but then coming down. Now, the good news is the general historic trend of the US and international market has always gone up, in spite of things like recessions, depressions, and other economic hardships. But this is why the stock market is usually best leveraged as a long-term play, rather than a day trading exercise, which requires a lot of skill and, frankly, a lot of luck. A day trading approach to the stock market essentially turns the stock market into a gambling parlor with your hard-earned money. However, one of the advantages to investing in the stock market is the liquidity of your assets. So whether you see a new opportunity you'd like to invest in or simply would just like your cash back, you can transact virtually at any given time. In the real estate world, transacting can be a lengthy and sometimes even messy process. It can be difficult to recoup the cash you need for different investments, life, or simply savings. But there are many no-fee platforms out there which allow you to make as many trades as you'd like fee-free, from purchasing stocks, trading stocks, or selling stocks to recoup cash. And the cash from a transaction can usually hit your savings account within 3 days of selling. Oftentimes, it can even be immediate. In addition to this, these platforms also enable for partial shares trading. What this means is that with even just $1, you can buy a piece of Tesla stock or a fraction of a Bitcoin, instead of requiring you to have a full $202 to invest in Tesla stock or $61,000, better yet, to buy an entire Bitcoin. Platforms like Robinhood and SoFi enable you to invest as long as you have as little as $1, as well as to make as many trades as you'd like fee-free. But probably the biggest benefit associated with investing heavily in the stock market is the low amount of work that is required. When we get to real estate investing, we're going to talk about how hands-on and how work-intensive this type of investment can be. The best way to invest in the stock market is to consistently buy funds or ETFs, put your hard-earned money into these funds, and essentially forget about them for a few years. But again, for anyone who worries about the unknown, the trouble they'll have is stomaching the idea that their money is at any point climbing or potentially plummeting a few points in any given day. But over the course of years, this is a great way to let the laws of compounding interest really kick in on your hard-earned dollars. Okay, so we've talked about some of the major things to consider when investing in the stock market. Now let's talk about investment in the real estate world. Real estate is an incredible way to build wealth fast. When you purchase $50,000 worth of stock in the stock market, that's exactly what you're buying. $50,000 worth of a particular stock or fund in that particular day of the market. But when you put down $50,000 on a house, you could potentially be purchasing a $500,000 asset, which is going to appreciate and compound over time just like your $50,000 would in the stock market. Except a 5% appreciation on a $500,000 asset is a lot more appreciation than even 12% on $50,000 worth of stocks. In addition to the size of these assets, the appreciation of these assets is also relatively more assured and steady. Real estate markets do ride a wave, but that wave is far less volatile than the stock market. That being said, signing up with $500,000 assets with a $50,000 down payment means that you're willing to sign up for some debt. Actually, a lot of debt. Real estate investors must be comfortable with the idea of leverage, which essentially means taking other people's money to purchase assets which then you will pay back over time. In addition to that, it usually requires at least 10% of a home's purchase price as a down payment to purchase a property, which means that real estate investing is relatively capital intensive. And a lot of young investors, frankly, just do not have the capital it takes to invest into real estate for this reason. Unlike the stock market, which you could choose to jump into today for as little as $1. Now, a savvy investor is going to know how to use leverage, use this debt to create an income-generating business out of a rental property. If you'd like to understand how to run those numbers, I've already made a video, which I will post here, which dives specifically how to run these calculations to ensure that you're making money on a property. But a good investor can make thousands of dollars a month by purchasing, financing, and renting a property out to tenants. Now, a lot of people are going to jump in and say, hey, some stocks offer that through dividend payments. But the fact of the matter is, in order to make thousands of dollars worth of dividend payments, which you'll either get monthly or most of the time quarterly, that's going to require hundreds of thousands, if not millions of dollars to earn passive income that way. Not to mention, high dividend stocks usually aren't the best stocks when it comes to appreciation or increased valuations over time. With a rental property, you have an asset which is almost assuredly going to increase as high as 5% year over year, while putting thousands of dollars in your pocket on a monthly basis. Another one of my favorite parts about real estate investing is how much control we have over the valuation of a property as investors. As the investor and owner of a rental property, we essentially are the business owners. And through good old-fashioned sweat equity, time, and investment, we can increase the valuation of our properties, we can increase things like rental rates, and we can increase resale value. In the stock market, it is not so. The valuation of that company is going to rise up and down, and we have very little control over that. But by purchasing a rental property and taking really good care of it, potentially making some renovations, some improvements, even some do-it-yourself projects, and finding great tenants who are going to take care of our properties, the valuation of our properties can really go up. And we can even have some control over the monthly rental rates we're earning on our properties by taking good care of our properties and improving them as well. But for this reason, there are a lot of investors out there who will dip their toes into the real estate investing world by purchasing one property, find out how much work it is to maintain and improve a property, not to mention find good tenants and potentially deal with those tenants, and within a few months, they already want to back out, sell the property, or at least hire property managers to run the property for them, in which case their cash flow is going to be significantly affected. Some people are just not built for that type of work. And honestly, if you're not into side hustles, if you don't want something to eat up your time, attention, and work, real estate investing is probably not the best option for you. But another great benefit, which may incentivize those who think that real estate might be too much work, are the tax benefits. There are huge tax benefits and breaks for real estate investors, which ensures that you can pocket your hard-earned income. You should talk to your tax advisor about this, more specifically a tax advisor who specializes in real estate tax breaks and deductions. So what do I think is best? Well, the answer to that question is going to vary year to year and person to person. However, generally, when I'm speaking to friends and making recommendations, I always recommend to my friends that they get started in real estate as soon as they can. And the reason for this is we all need a place to live, and we want to make sure that the money we're paying to live somewhere goes towards the principal of an investment we've made rather than the principal that somebody else has made. Now, that of course is assuming that we can find a home that we can afford. It enables us to be able to save money, invest money, and build a portfolio. It's no good if we've purchased a property that we can't really afford, save, and build wealth with. This is why wise folks like Robert Kiyosaki warn us that unless a property is putting income into our pockets on a monthly basis, the homes that we're living in are liabilities to us, meaning they decrease our savings power. I make that recommendation, by the way, based off of my own personal experience, which I'm willing to share. I got into the real estate game a lot later than I should have. As a young investor, I was saving and investing as much money as I could into the stock market, and I didn't purchase a home for years after I realistically could have, because frankly, the really dumb reason that I was single and didn't want to purchase a permanent home until I was married. I went ahead and purchased my first property as a single in 2018, and I learned a lot about investing in real estate by doing so. I really wish I would have invested in real estate sooner, and so I really encourage folks to invest in real estate just as soon as they can. In fact, I believe that so much, I've since purchased at least one home every year since 2018, and I'm really glad I've done that. I've increased both my wealth as well as my income following this model. And if you want to learn a little bit about how I did that, I'll cover that in more videos on this channel. To illustrate this point just a little bit further, I'm actually going to use an example of two investments that I made in 2018, the same year I bought my house. So in 2018, I also had opened a new fund in which I invested $50,000 into an ETF, which again is essentially a basket full of stocks, which for the most part represented the highest performing companies in the Fortune 500. So in February of 2024 today, that $50,000 investment has appreciated to right around $93,500. A $43,500 increase for not much work. But by comparison, I also purchased my first property like I mentioned in 2018. That I did with a $30,000 down payment, and the property was valued at $302,000. That property evaluation today is currently $490,000. At one point it was $550,000. We can't count that. It's $490,000 today, which means that that home appreciated by $170,000. In addition to that, in 5 years of renting that townhome out, I've generated over $48,000 worth of rental income, which means that I've earned $170,000 in appreciation. I've also earned over $48,000 of passive income, which I now turn right around and invest in the stock market and other real estate purchases. Now, the caveats I provide there is I'm obviously talking about an investment I made in 2018, both the stock market investment as well as the real estate investment. So the 5-year returns that I earned from this are realistically not realistic, as they take into consideration very unprecedented years in our market, both in the stock market as well as real estate, those being 2020 through 2022. But I think that this paints a picture pretty well, which is that real estate investing, for those who are able to invest in real estate, is a really powerful tool both for wealth generation as well as income generation, which subsequently supplements what we're then able to invest in other things. That's it for today's video, folks. Hopefully you enjoyed this content. If you did, go ahead and like and subscribe, join the Tyler Huxford family, and remember the giveaway at 100 subscribers, which is coming up here real quick, folks, thanks to you guys. We're going to be drawing names for anybody who subscribed to the channel and who has commented "Here for Hux" on any of my videos. The winner of that drawing is going to receive a free $100 Amazon gift card sent directly to their door. So get yourself an Amazon gift card, go ahead and comment "You're here for Hux" and be subscribed. Hope to see you next time, folks, and safe investing out there.